Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Tuesday, September 10th, 2024. It's 11:55 a.m. Eastern Time, and I wanted to do one more video because I am seeing some important developments, some changes today. Not really changes. Well, let me get to that. It's the banks, J.P. Morgan, the regional banks. So start out here. Just to recap, we have this is a zoom in of the Nasdaq 100 future 60-minute chart. There's that level we got rejected at today. Remember the arrow breaks were. We've got the resistance levels where this downtrend line, which we danced along and we took out. We're running up today, hit that, but also ES hit resistance at the same time. So these levels are certainly key levels to watch. There's the ES right there, which are the S&P 500 futures. Remember, we had the 54.91 resistance, and we hit that level. I actually put in a little divergent high there. You can see a little divergence on the indicators. But more importantly, it was a rejection. We failed to break through there. Remember, collectively, both indexes were at resistance at that time. ES was trying to poke its head above and got rejected and has yet to print a solid 60-minute close. But I'm doing the video. The bigger thing is, I'm watching the financials closely. If you recall, in recent videos, I started highlighting these a couple weeks ago as ready to go with trendline breaks, and then followed up with sell signals confirmed, and saying that was the bulls. One of their pillars for the bullish case was, okay, it's just tech correction, no big deal, rotation out of tech. They've done very well, need to take a breather, but everything else is doing good, and financials and are at new highs and blah blah blah. Well, boom, they took it out and shot the financials. Breakdown there, the clear breakdown is highlighted recently on XLF. And then earlier today, we hit the trend line the other day. I'm sorry, not the trend line. The trend line's clearly broken. We hit my 44.19 BOD, or first support level, benefit of the doubt. Hit it to the button. You can see the low that day. And again, that was laid out long before we even broke down below the trend line. Look at that pop-up box. Low of the day, 44.19 on Friday. And so I'm doing the update now because since the last video, the financials, this is a 1-minute chart. Did the video this morning for you, starting out in pre-market. Financials took a dive, and that's what I wanted to highlight here. And like I said, all eyes have been on tech lately. Tech. And financials are good. Everything else is good. But I told you this would be the next shoe to drop. And so far, now we're there. We're at 44.10. And they'll probably step in and buy it here. Probably, but maybe not. My what I always say is I list targets and support levels, because each level upon the initial tag, I expect a reaction, or the odds for reaction are likely. A reaction being a bounce when you're going down, hit a support level, or a consolidation on that level. Whereas once that reaction's happened, it opens the door for a breakdown. So right now we're cracking through there. It's not by a wide margin. Could still see a stick save today. But remember, the J.P. Morgan is the NVIDIA of the banking and financial sector, meaning NVIDIA is the all things AI, most important tech stock, even if it's has a little bit smaller market cap than Apple and Microsoft, because of the psychological importance and everybody just pounding in. And so J.P. Morgan, I've always referred to as the 800-pound gorilla in the room, the undisputed heavyweight champ of financials. And this is a big red stick. I looked at the news headlines, and supposedly, I guess somebody came out, one of the, it wasn't Diamond, it was somebody else, looks like, in the news, and, revising guidance down, saying concerns about these rate cuts. And bottom line, guys, J.P. Morgan's problems are everybody's problems. They are, again, the darling of not just the banking sector, but of Washington. When J.P. Morgan speaks, people listen. He's got the ear of, just about everybody in Washington. So, and he's a good guy. He's he knows the financial markets and banking system better than anybody, just about, and that's all things. A healthy banking system is a healthy U.S. economy. So again, anyways, look. It's not just a little blip. This is a big breakdown. Again, we had a sell signal on it here. It's been on a sell signal, broke down there, and so far, and now the selling is beginning to accelerate. And so we go through there. It's mostly J.P. Morgan, but you can see American Express breaking down today. I'm just trying to highlight who's going down. Goldman Sachs. So we're starting to break some of those next support levels on the banks, and I can't underestimate the importance of that. I didn't think it would happen so soon, but like I say, markets are dynamic, and so is my analysis, so you have to react to it. Just had a price alert. I've had a couple go off lately, but Scoop, here's one for you. This happened right after I started the video. I don't know if you heard the little chimes going off, the little alert bell. It's right on the trend line now. This is Mr. Cooper, big mortgage processor, and beautiful, clean, very well-defined uptrend line in which to trigger a short sell signal once that breaks. We're right on it now. The alert hit because we hit it or went a hair below it, but there's my first target, 78.46. Minimum target. I mean, bare minimum. That's about an 8% drop right there. So that's what I wanted to get out to you guys. Now, look, again, JP Morgan down a lot. If it, I haven't wavered or waffled on where I think the banks in the market are going. So to me, it's there's nothing set in stone. But I maintain my minimum target. I told you XLF once 44.19 clearly gives way. My next target's down here at 42.43. And that will most likely take the S&P and the market down with it if that happens today. So they either save it today, come in here and buy it. Like I said, watch JP Morgan. That's a very important one. That one's clearly right now under the 203.47 target support. Already, just in what, since the breakdown, not even 2 weeks ago, less than 2 weeks ago, we're down 9%. Again, I'm figuring they're probably going to come in and buy this up, save it, park it, or on or around that 203.50 today. That's about as big a drop as you're going to see in JP Morgan. Things have been relatively stable lately in the market. I told you there's not a lot on the economic calendar, but what I'm trying to convey to you is we're in distribution mode. If my analysis is correct, if it is, and I've already called a top, and we just completed. After the August 5th lows where we reversed, came to bounce, we just completed the first counter trend rally, and we're now started and have begun. Again, I'm trying to just map it out for you, that whole where we are thing, like when you go in the shopping mall, first wave down, counter trend bounce. So if this is the beginning of the next wave down, it will, and not too long from now, start to accelerate. So the whole little bounce targets I've given you, which are still there, we still haven't failed the breakouts yet on we're still above the supports on ES and NQ that we went long at yesterday. And if those supports are clearly taken out, then this probably will happen soon. Like I said, there's not a lot on the economic calendar. Today happened to be, I guess that's the catalyst, what came out of from JP Morgan. I was watching KRE. Remember when I highlighted the financials? I also covered the regional banks in recent videos. I gave you a few months back when we were shorting the broad market, gave you a shorting zone right here. We shorted the financials down. Regional banks covered on August 5th when everything else bottomed, went long, reversed. And then I highlighted again as an objective short entry in that same shorting zone. And then with an additional sell signal come on a break of the trend line. And you can see they're starting to get some momentum. And so this is a problem for the stock market. And again, it's a profitable short trade if you're swing trend trading the regionals, and we're starting to crack that uptrend line. So we've had, again, objective short entry 1 in the zone, objective short entry 2, which was a sell signal. Remember, rally into resistance is not a sell signal, but it's an objective short entry. If you believe that resistance level will cap it. Break of support, such as a trend line, is a sell signal. And then this is a second break of a second trend line, next sell signal. Now, again, I'm going to end the video here because I wanted to get that out to you. Those are the main things I'm watching today. We're in very close proximity to those levels. And just going back to, the NASDAQ is still so far above support. So if we just do this mechanically, You have simply a successful defensive support, especially after a little whipsaw right there, and then a breakout, test of the downtrend line, a breakout. We reversed off the first resistance level where a reaction was expected, and so far that's all that is. If we go much lower, then everything changes. So that's that. And then on ES, same thing. You had, this is the key support level. We're getting close to it now. Remember ES, and I told you guys a few days ago, or earlier this week, no, late last week, whatever, based on my bearish call for the financials, that we would see a shift where recently, until again for weeks now and months, the cheerleading squad for the market has chided the financials as being, doing really well and broad-based rally. And I said, no, that's going to change. You're going to see ES start to close that gap and play catch up to NQ on the down days. And so today, right now, I'm looking at the futures. ES, the S&P 500 futures are down as I speak, a half a percentage point, 0.50 exactly, and NQ is down 0.41. So that shows you the rotation now out of financials and more into tech, at least tech outperforming as of today. And again, that's what we're looked at. So as I said, if you're prefer to trade SPY or ES, whereas I strongly advised against it back on the first drop down when the S&P only fell less than 10% and we got about a 16% drop on the NASDAQ. I'm talking the first wave down. That's when I made clear, my strong preference for the NASDAQ 100 versus the S&P being short. We outperformed. Now, this time around, like I said, if the financials buckle, which I think they're going to, it doesn't necessarily mean SPY is going to outperform QQQ. Tech is still a more volatile sector. I still think tech will probably drop more, but it's going to close the gap. And it wouldn't surprise me to see the financials even outperform for a little while. Like I said, today's one day. One day doesn't make a trend. So I'm going to wrap it up here. And again, the takeaway is that these are developments to continue to watch. We're at support, as I just showed you, on ES and NQ. That hasn't been taken out yet. And basically, so it's nothing more than a breakout. Successful defensive support, especially after whipsaw. We rallied into the first resistance levels. I expected a reaction. We got that reaction. And the financials now are going to make or break whether we're going to rally or not. So if XLF, and if you want to know my opinion, I think they will. They'll step in and buy it here. I think the, Pavlov's dogs, meaning dip buyers, bell rings, they're probably going to come in and buy this 7% drop. That's the biggest. You don't see a red candle like this in a long time on JP Morgan. And again, it's not random. None of this stuff is random. It comes on the heels of a breakdown. Bulls were tripping over themselves, foaming in the mouth, bullish right here on how well the financials are doing, and shows how the economy is so strong. We're not going to have a recession, and what a technical breakdown, how quick it can change sentiment. And again, it's not just a random one day down. Here's how I kind of measure the scope of moves. You just take that candle right now and make a trend line. You can make it nice and fat if you want. And then you just move it around. You'll see there's not a single candle. You got to go back to, I'm sure we'll go back here to when the party got started back in 2022 until you see a candle that matches that. Even then, I'm struggling to see a red candle that big. So either way, take it for what it's worth, guys. Maybe it's a one-day wonder. I don't think so. And again, this is, that sell signal we had lately was just the start of a much bigger drop based on the technicals. I think, again, they'll probably come in and buy it today, but it won't shock me if they don't. This is the nature of a bear market. If that's what this is, just early stage bear market action, it starts to accelerate as more and more market participants realize what it is. Then the selling begins to accelerate. So the first wave down, if you're an Elliott waiver, is not the most powerful. It's always P3 on a primary 5-wave cycle. That's if you turn off all the lines. Again, if it plays out as such, wave 1 down, 2 up, 3 is always the most powerful. Then you get a wave 4 up and then a wave 5, and that's a 5th wave cycle. But P3 is the strongest, and so that kind of meshes. And the only reason I keep bringing this up, I always say I'm not a big Elliott waiver. I've studied it, played around with it for years, and it's there's many other counts in there, but the wave counts are a little too subjective to hindsight analysis and modification for me to find a lot of predictive value. But the takeaway from the typical corrections being in ABCs, whether it's a corrective move down or in a downtrend, an ABC up, you can look for those, and those play out quite often. And then the P5s have taken, we've seen even the bear market that occurred back here, and we're not on the long-term chart. 2007 to 2009 played out in that five-wave fashion. All right, guys, I'm going to wrap it up here. Let you keep an eye. Like I said, I think they'll step in and buy JP Morgan and hold it, hold the line with a little intraday brief break below on XLF there. In other words, stick save it, meaning park it on or around in close enough proximity to 44.19. But if they don't react, don't be married to any one bias or anything. The market must do this. I'm not right now sitting tight, but I wanted to recognize this. And what would cause me to flip back short again? Well, obviously, if I see continued deterioration, and it's not just JP Morgan, just like it's not just NVIDIA. To me, in the tech sector, it's NVIDIA, it's Microsoft, Amazon, Alphabet, all collectively, the semiconductor sector, the semiconductor stocks individually, all that stuff. All right. So let me get the video out to you, and keep an eye on that. And, if they can rally it here, maybe we get some reprieve, the dip buyers come in, give the financials a little more, consolidation or another bounce, and then at some point later, that would be what I'd prefer to see, get a little bounce here. And I'm not saying it only because I'm long the indexes at the moment in my active trading account. Remember, I still have, I'm still short the financials and short tech and everything, short the semis in long-term accounts. But I'm waiting to get more aggressively short when these levels go with conviction. And that can come today, tomorrow, or it could come 3 weeks from now, or anytime. But my guess is it's going to come after a little bit more upside in the markets to those targets I gave you earlier on the S&P 500 and NASDAQ 100, and maybe the financials will rally here, maybe not. So keep an eye on them. And if you can either revisit one of the recent videos I did on the financials, including the regional banks, to find those. If you're new to the site, let me show you real quick. So on any post, when you're on rightsideofthechart.com, you'll notice underneath the post, even if the post is open, anything that I've covered in that post, I tag it with the ticker tags. These are hyperlinks. So if you want to see the last update on Nat Gas, and I use, not just Nat Gas, I'll tag it with UNG because that's the ETN you trade, but that's going to pull it up. So everything, when you click on it, if I go on UNG here, it's going to load all the posts that have covered natural gas in reverse chronological order, meaning the most recent. So, for example, the financials, what's what we're talking about now, where is it? XLF. Oh, did I leave that out? I think I covered them today. See, I may have left out that symbol tag. Okay, maybe I did. Maybe I didn't cover it. If I covered in that video, I'll have to add the symbol tag in. Sometimes I forget. But I've been covering them quite a bit lately. I'm just trying to show you here if I can find financials. Financials, I know I've been covering. Here it is, XLF. I click on that, it's going to load all. So you've got, for example, here, price targets for the financials right there. JP XLF going down to 44.14. That's an hourly 60-minute chart right there. IXM, the financial sector futures, and XLF, there it is. 44.19, the BOD level, and down there and all that. So these are the longer term targets. So, and again, that's how you can find that. And if you go down, same thing for the regional banks. And then I gave you a lot of individual banks and financials, both large financials as well as regional banks in some of those recent videos. So you just have to go here. It is KRE, find KRE, and there you go. So there's all the swing trade ideas on the regional banks, and all the videos and all that. All right, let me wrap it up here, get it out to you guys. Keep an eye on the financials. That's the thing about the market. Just when one thing starts to look good, tech semis, everyone feels It's safe to get back in the water. And look, I've highlighted and they're at support. They bounced so far. There could be some more upside, but that's the nature of a bear market. You just got to keep eyes peeled out. There's always a next shoe to drop. Where's it going to be? And so, like I said, financials so far have put a hard stop on today's rally and turned the indexes from comfortably green to comfortably red so far. This has been Randy Finney with Right Side of the Chart. Have a great